Hey guys, welcome back to another episode here, another stream here where we're going to take a quick look at stocks, but things are looking green. Right, Dow is up 1.26%, Nasdaq up 0.85%, S&P 500 is up it's up 1%, right? So my portfolio is doing green. I hope your portfolio is doing green, and I hope it stays like this. I'm super excited. My portfolio is almost reaching all-time highs again, but unfortunately, when that happens, it's gonna be another few bearish days after that, right? Because every time I hit all-time highs, it seems to only be short-lived. So hope everybody's having a good day today. I mean, the market was super exciting yesterday. Definitely super exciting. One of my tier 1 stocks is up big today after a CNBC gym. Is pumping it up. I actually gave it a few talks. They had an interview yesterday with Unity. Unity right now is up. What's going on, David Becker? How's it going? Unity right now is up almost 7% on the day. And it was a pretty, I saw the interview. I mean, it's a pretty simple interview with the CEO. I mean, it's the stuff we have discussed in numerous Unity videos here on this channel. So I mean, to me, it's I guess because we know this company so well, some of those stuff were not surprising, but it's crazy how some eyes are now looking at Unity after that simple interview. So stock is up about 7.9%. This is a tier 1 stock in my portfolio. So it is obviously it's one of the main reasons my stock is up big right now. Pretty cool, right? The Unity is about to make a U on the chart. But we also have some other big players up right now, right? We have Roku is up 3.5%. I believe Roku kind of got a price target upgrade from an analyst, increasing the price target on Roku. What else do we have? We have Celsius. Celsius is about to break that 100, close to that 100, right? Celsius has been a beast. I haven't really seen, I think it's just the overall market right now kind of not fearing that tapering yet. So growth stocks are are up a nice amount. Celsius is up 2.83%. Fizz, what's going on? Hey Jose, what's up? I have a migraine today. Must have dreamt about Peloton share price. I'm still working it. Fizz, I promise you that video is going to come. It's coming. All right. But Peloton right now $95 that we can see. Very crazy, right? This is a stock that's moved 116 down to 96, that back to 115, now back to 95. Fizz. So I mean, this is a crazy ride in just a month. All right. What else do we have? We have Celsius up 3%, almost hitting that $97 right now. Abs did a crazy turnaround story, right? Abs is now back over 72. Abs is definitely moving up right now. Activision is up 2.7%. Pretty much most of the market is moving. So I obviously, right, I don't believe what we saw was anywhere near a dip. It was just more of like a red day on Monday. Was it Monday or Tuesday? I forget. It was more of just a red day. Vicky, hey Jose, how's Palantir doing today? We'll take a quick look at it, Vicky. I just want to keep looking at my portfolio right now. Very rare it's green, so I might enjoy it while I can, right? So we have Square up a nice amount. Wow, Activision is below $75. That's pretty crazy, right, Fizz? Like I said, this is right now. I mean, this candle, again, I'm not a technical type of guy, but you can look at this candle, looks exactly like this one right here. So I wonder if this is going to be the turnaround story for Activision. Something to keep an eye out. Activision's, again, I'm not trying to downplay what's happening with management team, obviously understand, but how that's really gonna transfer to the actual IP of Activision, I don't think it's gonna be much. I mean, Activision is still gonna own Call of Duty, still gonna own World of Warcraft, and all these other franchises. So in the business standpoint, Activision looks very attractive right now. DraftKings is up almost 1.7%. I do have some red today, which is a bit interesting compared to how the market is right now. Net is actually the first one that is down, and we actually talked about Net yesterday, right? Net kind of had that. I said it was a bit overextended. Diablo 2 Resurrected is out this week, and yeah, I saw they're coming out with some new games. A remastered version of it, right? Net is down 3%, kind of interesting compared to the market. We also have Redfin down about 3%, Fiverr down about 2.6%. It does seem like Chinese stocks are a bit red on the market today. So what's going on, Rajesh? I'm low on spare cash this week. Couldn't apply dollar cost average on Tuesday's dip. Sad. And Rajesh, that's okay, right? Dollar cost averaging. We are definitely going to get another opportunity for that, Rajesh. Tuesday happened, and I'm pretty sure it's going to happen again. Fizz, your only red position is Shopify. Shopify is on the red. I don't see it. It shouldn't be on the red. It's on the green now. Over here it's in the green, 0.87%, Fizz. 0.87. So Shopify is doing good right now. It did kind of bounce off those levels. So I'm really liking the market. I did make my weekly purchases today. I ended up with Facebook and CrowdStrike. Those were the two stocks out of the four that I mentioned on my Saturday's video. So Facebook and CrowdStrike were the ones I dollar cost averaged this week. Unity, like we said, I think Unity is the biggest mover right now. The Canadian ticker is red because currency exchange. That's crazy how that works, Fizz. So we can see though, right? Most of the market is green right now. Dow is still up 1.28, Nasdaq up 0.93, S&P 500 up 1%. If we take a quick look, right, everything. All major stock. I mean, the big boys aren't up that much, right? Apple, Microsoft, they're only up about 0.36%. Facebook, Google, it definitely seems like it's not a day for the big players. It's a day for the small players, right? We can see the smaller companies are the ones that are up more. We can see, and it's impressive. It's crazy. We see financials being pretty green right now, banks being pretty green. Also, the software market, CRM, Salesforce up 4.24. Semiconductor industry is up about 1%. Lots of green. Honestly, this market, yeah, you know, right, Fizz, I thought we were going to see, with the way growth stocks were acting right now, I thought we were going to see financials kind of drop. But even financials and banks are up right now. So it is a bit confusing, right? Interesting. David Becker, yes, lots of green, not much red. I don't see anything heavy red right now. Soru Rubio, what's going on, Rubio? How's it going? Morning. So let's take a quick look. I don't think there's any interesting news today in the market. Unity up 7%. Any reason? Because it's a tier 1 stock in my portfolio, Didia. Only reason. Just kidding. I think yesterday on CNBC, Unity CEO had like a 10-minute interview in Mad Money with Jim Cramer. And then he's kind of been pumping it up. I want to say, I don't know if it's pumping it up. He's just been talking good about it. And it's, I mean, I think that's the only main news happening with Unity right now. So let's see, benzinga.com. Let's take a quick look at Unity. Ticker U. Yeah, so there's really no actual news on Unity. So it seems to be that just people getting excited after the interview. And like I said, I saw a few minutes of the interview, and it was just basic stuff that we know about this company, how it's kind of doing real-time 3D solutions that are being used outside of gaming. And that's why everybody's so excited about Unity. But it's something we've known about previously. So interesting for sure. I guess more people should be watching my channel instead if they want to know some tier 1 companies ahead of time. Fizz, 6 months ago he said he liked Roblox more than Unity. Now he called Unity the best pick and shovels play. Interesting. Roblox is definitely interesting company, but I definitely wouldn't put it in the same not tier, but in the same kind of circle, just because they hit different markets. Roblox is actually pretty interesting though. I mean, the way Roblox is kind of making the meta, it's definitely a strong leader in, I don't know if I would say the metaverse, but the super early kindergarten version of the metaverse. And I don't mean like kindergarten based on their playstyle, but just where it can go from it, right? Technological wise, where it's at right now. Vpool, what's going on, Vpool? Hey, Jose, do you have a view on Skills? Yes, I do. Skills is actually in my portfolio, Vpool. First thing I want to say is Skills is always, well, not always. What's going on, Gordon? Skills is, at the moment, and for the foreseeable future is going to be what I call a speculative play in my portfolio. So what that means is I believe Skills has the potential, if they execute correctly, to be a big winner. At the same time, I believe there is a lot of risk in this company, one that will be very, very volatile. I do not like Skills for the games they have right now, but for the potential games that they are doing in the future. So that's why it will maintain a small position in my portfolio. If it does, and even a small percentage, if it does really well in the market, a small position can really, really move a portfolio. So Skills, fundamentally, they're not profitable right now, but they have a strong balance sheet. Again, for me, I'm more in the futureness of Skills. Nothing right now in the short term that makes me very bullish. So I know. Oh, here we go. I was gonna say I know Fizz hates Skills, rightfully so. And one thing that Fizz mentions a lot that I agree with is sometimes you could be a little too early to invest, right, in a company. And Skills is probably that company that, hey, even if you invest now or in a year, once they have better games and once they have better a better roadmap, I would say. With more unique gaming studios, then that might be a better time to invest. At the same time, I think position sizing helps out a lot, and for that, Skills is a small position in my portfolio, but I don't mind holding it. So Jose, what are your takes on Fresh IPO? So I haven't, Rajesh, I have not looked at Fresh IPO. That is an Indian company, I believe, right? I think it's the first, one of the first Indian companies to kind of start publicly here in the United States. Yesterday or Tuesday, what's today? Thursday. So Tuesday I was in a clubhouse. There were a few Indian investors that were super excited about Fresh IPO. At the moment, I have no thoughts on it. I haven't really looked at it. Ben Perez, is Roblox really that big? Honestly, don't know anyone that uses the product. It is. I do. It is. I think it's insane. I mean, they just released their key metrics. They saw huge growth in numbers, huge growth in hours engaged. So the game is there, and it's been pretty strong for numerous years. And now you're starting to get big names kind of working with them. Netflix created their gaming, their first gaming experience on Roblox. Vans has done it. Hasbro is partnering up with them. So they have a lot of big players kind of now moving into that market. So I mean, for me, Roblox is in the gaming market definitely interesting. Maybe something I wouldn't mind holding off to maybe right now. I like it. Future growth potential, metaverse potential. Maybe not my favorite gaming play. Fizz, Skills ads are kind of smart though. They get celebs to talk about their platform via playing for camo videos. Must be cheaper than getting the celeb to do a proper ad. Oh, that's actually pretty cool. This is actually pretty cool, right? How they, I might just start paying celebrities to camo my cameo or whatever it's called, my YouTube channel. So what's going on? Fizz says Skills pays $1.50 to make $1. Cost of revenue is way too high. Yes, that's one of the biggest yellow flags, and I talked about it in their earnings, just right. It's their cost of acquisition. Cost of acquisition is super expensive for Skills. And again, I do believe that's the main reason right now is due to the games that they have. Once they have more popular games, it's more going to be a word of mouth type deal. Charles, what's going on, Charles? Oh, nice, Rajesh. Thank you. Appreciate. Yes, Fresh is the first Indian company to be listed on NASDAQ. And hey, I am a big fan of you from India. Appreciate that, Rajesh. So I'll definitely, once I have more time on hands, Rajesh, I'll definitely take a quick, I'll do a quick insight on Fresh. I'm honestly not familiar with the company at all. Charles, what's going on, Charles? What's going on? Hey, Jose, is SoFi a buy right now? So look, SoFi is one that I just did a video on. I enjoy the stock, right? I mean, I don't have it in my portfolio, but I can definitely see the potential of investors. I mean, yesterday you had about a 10% gain on SoFi, so I believe volatility is very likely on this company, Charles. To me, SoFi, even though with this increase, it's still more of a long-term hold. But it's still, I wouldn't mind buying at these levels if I was bullish in the company. But I understand that SoFi, with the type of market it's in, is going to be very volatile. So if you're not prepared for the volatility, as quickly as this company went from $15 to $17, it can go from $17 back to 15. I'm not saying it's gonna happen. I'm just saying there is the potential, and I believe the volatility on this stock would allow for movements like that. So you have to be really prepared. I like other fintech companies outside of SoFi right now, but I can definitely see why investors are super excited on this company. Strong growth in numbers, in financial products, in members, and revenue. Strong, they're profitable. Finally, trailing 12 months adjusted EBITDA profitable. So I can, and I'm actually a consumer, a customer of SoFi, right? I've talked about it in the video. I just took out like a small business loan. It was so easy for me to do it through SoFi, and now they were able, if I downloaded the app and did everything through their app, I was able to get even better rates. So it's a great way for them to kind of cross-sell to me. So definitely that flywheel business is very interesting. And I do believe that right now we're kind of I don't know if I'm just noticing it based on the people I hang out, but I'm seeing more people want to become more financially knowledgeable, if that's the case. And I feel like something like SoFi, where you have your credit cards, investments, where you have loans and everything else like that, it's a good play with the way the market, at least the people I know here in the United States, how they're moving into more financial knowledgement. And I think that's a great play with the way the market is moving right now in forms of consumers. So Gordon, what's going on, Gordon? I'm going to check you out because you are a member. Thank you for supporting the team, Gordon. So you want to take a quick look at Signify Health, SGFY. So first, right off the bat, I'm pretty sure this is going to be foreign company, right? International company. So no, actually it's not. SGFY. Normally when you see the Y, it is because it is foreign. But we can see stock price right now, Signify Health, they super small market cap, right? $3.4 billion, right now sitting at $20.29, down about 5% today. We can see from its 52-week high, the stock has definitely seen better days. It's down about 48%. It seems to be a recent IPO, right? It IPO'd on February 11th of this year. So it is a recent company. Let's take a quick look at valuation metrics, right? So we can saw super small market cap of around $5 billion. Let's see overview. They operate as a healthcare platform that utilizes analytics, technology, and healthcare provider networks in the United States. So that is it more like a CRM style, like a customers relations management for healthcare? I might something around those lines. It seems they create a healthcare platform that uses analytics, technology, and healthcare provider networks in the United States. So it's more like a business-to-business product. We can see the company is not profitable, but they are positive in cash flow from operations. So for me, if you guys are familiar with me, I could care less about earnings. I care more about positive cash flow from operations. That's where it makes money from its everyday operations, especially because GAAP earnings usually include sometimes one-time expenses, one-time losses. Cash flow from operations for me is probably my favorite metric. We can see this company is expected to grow 15.6% on average for the next 3 to 5 years. So it's a nice growth story with positive cash flow. Let's take a quick look at their financial health. Financially, right, they have about $1.2 billion in long-term assets, about $340 million in debt, and $631 million in cash and short-term investments. So, Gordon, I do want to say that they have a very strong balance sheet, right? I mean, they're not leveraged. They are positive in cash flow. They're looking to grow strong levels. Fundamentally, I like it. Obviously, I don't know the market right now to say what the market is in. But if we take a look at their at technicals, I'm going to say their technicals. This is a stock that's been very volatile. There's no real support or anything, but it is a lot cheaper than when the company IPO'd. So the first thing I want to say is, with these types of volume bars, I would guess that maybe expiration period on their lockup expiration might have ended already, because these are some big lockup, these are some big volumes. So that might have caused some form of movements. That's the first thing we should probably check out. SGFY lockup period. A lockup period will start about a 93-day period. So it's about 93 days, it seems, for their lockup expiration date to be over. And at 93 days, that's about 3 months. So that might have happened already. So that might be why you're seeing that increase in volume around here. So if February 93 is about 3 months, so that might be interesting. I would definitely double check on that expiration date. But with these type of volume bars, I believe these are some form of big insider selling right now on the company, which could be providing investor opportunity. We saw strong fundamentals, Gordon. I like the fundamentals. No yellow flags from fundamentals, but at the same time, I'm not too familiar with the company market. So hopefully that helped out a bit. So let's take a quick look at the market again. Let's see how it's moving. Are we still green right now? Yes, it keeps going up. Dow is up 1.38, Nasdaq up 1%, and we got the S&P 500 up 1.25%. So market is doing pretty good. We can see my biggest winner right now is Unity. Thank you to Jim Cramer for Kramer. Is it Kramer or Kramer? Vincey, good morning. What's going on? Keep up the good work. Thank you. Appreciate it. So Unity up almost 7% on pumping this, I want to say, or that's what Fizz is calling it, right? Pumping. It's just more people are watching my tier 1 stocks now and sitting in a meeting during this beautiful market open. SMH, it's beautiful, Dave, right? I mean, I'm pretty sure you're happy you got into you got into DraftKings, I believe. You got into CrowdStrike, I believe, yesterday or 2 days ago. Those are looking good already. So I know you did a little dollar cost averaging in some positions, and they're treating you right now, Dave. So market is looking good. Activision is kind of back up 3%. Celsius up 2.7%. Roku got a price target earlier today or late last night, and it's up 2.5%. We're definitely seeing a huge movement in the market. To me, I mean, Tuesday or Monday, I want to say, right, it wasn't, I wouldn't say a dip, right? I mean, I think that was just simple volatility in the market. It was so crazy how that Evergreen or whatever it's called, Grande Green thing only lasted about a day. It's crazy how forgetful, or how I wouldn't say forgetful, or how we just kind of skip news after the initial day, and then it's like, nothing else is gonna happen from here. I'm not saying something is gonna happen, but the market moves pretty quickly on news nowadays. Celsius, yes, Fizz. Congrats to all the holders. I agree. Congrats to Celsius. Has been one of my favorite positions in not the tech market. And I feel to some extent, maybe that's why I'm a little excited. Maybe that's kind of the bias I have with Tattoo Chef, right? Fizz, I know a lot of people always question my Tattoo Chef. Who knows? Maybe it might be some bias that Celsius did such amazing outside the tech market. Maybe I might hit another home run with Tattoo Chef. Except that one is not proving right at the moment. Even though I'm still green in Tattoo Chef, I think I entered in the low teens. I believe maybe I might have some bias just to seeing how strong Celsius did. Celsius, this is insane, for sure. But let's see, what other stocks do you guys want to take a look at? What's going on? You want to take a look at CEI? I think we might have heard about this. Camber Energy. I don't even see. Do they have graphs? Camber Energy, or is it just that my? What the heck? I don't know what's going on with CEI. So let me try one more time. I mean, CEI, Camber Energy. What's going on, Maggie? How's it going? Luis, what's going on, Luis? All right, I'm not too familiar with this company, CEI, so it seems pretty interesting for sure. But let's see. So Maggie, can you share some view on ABB? All right, let's take a look at Maggie, and then we'll take a look at Luis with his Baba and Baidu, and then Vincey. We can take a quick look at CoOPN. So Maggie, again, thank you for the support, Maggie. Welcome to the channel. Well, welcome to the stream. You are awesome. ABB. Pretty good. How about I'm doing good? I mean, market is doing good, right? So I'm super excited. So I'm guessing it's this one, ABB Ltd. Maggie, let me know if this is the right one. Right off the bat, I'm gonna say, hey, this is a strong stock. It's been pretty strong this whole year. So right off the bat, one thing I would say is, hey, it has the chance of a pullback at these levels, and we can see that pullback happened. The pullback happened. So right now, in forms of technicals, because of this run up now, I would say that, hey, this is more of a dollar cost averaging position. We can see it definitely seems to do some pullbacks. It's not overextended from a short term moving average, a bit overextended now from its medium term. So if dollar cost averaging may be a little bit bigger a position compared to if you were buying at these levels. So technicals, not the worst things. Definitely a strong company with a strong trend right now. If we take a look at fundamentals, right? So ABB, what do? So they manufacture and sell electrification, industrial automation, and robotics and motion products for customers in utilities, industries, and transports. I'm actually interested about this company. Do they sell the robot arms? Global app. Come on, just give me. That website didn't work. I want to see their products. I want to see what they look like. Come on. I don't know. So I just want to see some of their images. Apps. I mean, it seems like they work with automation. They sell the robot arms. Okay, thanks Rajesh. I've worked with some robot arms in some of my previous engineering jobs. I always forget what company it was though. Which is pretty. I mean, robot arms are pretty impressive, and engineers working with them. So they sell. Okay, so they sell automation hardware, which is pretty impressive. I mean, right now as the market is kind of moving into a more automated world, I can definitely see the market behind it. I can see why there has been a strong trend in this company, right? So let's take a quick look at future growth. So right now it has a market cap of about 70 billion CHF. I'm not sure. Let's take a look at 70. What's the conversion? CFS to USD. So that's actually okay. So it's about $75 billion of a market cap. So it's a pretty nice company right now. If we take a look at future growth, this company is expected to grow 4% on average. So it doesn't seem to be a heavy growth stock. Overall, that market might be improving, and analysts could be kind of underestimating it. We can see this is more of a stable company already. It is profitable. It is positive in cash flow from operations, right? It does pay a form of dividend of 2.4%. So this is more, right, Maggie, if you're looking for not a growth story, if you're looking for a market you're interested in, maybe you're interested in the automation market. I don't know how much percentage of revenue comes from automation itself, but if a strong one, this is definitely a strong market, strong company with profitable earnings, positive cash flow. Siemens is one of their major competitors. Okay, I do know Siemens for sure. Worked with a lot of their automation programs. They have a lot of PLCs and stuff like that. So I've worked with some of Siemens. So I wonder, okay, so if they're somewhat like that, that's more of a market that I believe it's maybe not gonna. I mean, returns. This is a stock that has given you great returns over the past. I want to say fundamentals is strong, not a growth story. That's not what you're getting with ABB. You're getting more of a stable company, some dividends, some positive earnings. The last thing I actually want to take a quick look at is Y charts. I want to say maybe with that run up, there is that chance, right? It's been a whole year since this company has run up. There might be the chance of for example, maybe some pullback. So I want to take a look at EV to EBITDA forward. So this is pretty impressive, right? So even though this company stock price has gone up like crazy, right, Maggie? If we take a look at its EV to EBITDA forward ratio, it's actually sitting at lower levels than it was before. And that's why sometimes just looking at stock prices doesn't really make sense. There's a reason stock prices move. It's kind of moving to kind of keep up with its fundamentals that it has increased. So EV to EBITDA sitting at 14.71 compared to, I want to say here in January 20, where it was kind of sitting at those levels already. Technically, in the fundamentals of EV to EBITDA, it doesn't look expensive. Obviously, I could be wrong, and people sometimes might just look more at the stock price, which can create some form of volatility. But looking at this financial metric, things are actually looking pretty good for this one. It's right. We see more dividend plays, right? We see companies like Microsoft, right? Just to put in perspective, companies like Microsoft right now have an EV to EBITDA of about 23.37. So it's a lot cheaper than those tech companies, right? We probably have more growth in Microsoft compared to ABB. So that's why it is cheaper. But it's telling me that, hey, there's a good portion of the risk probably has been eliminated due to its fundamentals. What's going on, Sniff? What's going on? So you purchased a significant. First, let me say, Sniff, thank you for the donation. I appreciate it. So I purchased a significant amount of shares of Labrador Iron Ore F, which currently gives an annual dividend yield of 21.8%. That is pretty insane. Sniff, I mean, a 21% annual dividend yield. What's up with that? There has to be something. Right, what's the downside of that, Sniff? I'm pretty sure that's not a market I understand at all. You're saying ore, so I'm guessing it's in the material market. So that's Sniff Lift CF. So let's see, Labrador Iron Ore Royalty Corporation. Through its subsidiaries, it's a 15.1% interest in Iron Ore Company of Canada that produces and processes iron ores in Labrador City, Newfoundland, and Labrador. So pretty interesting. Fizz, just like agree, Fizz, right? I mean, a 21% annual dividend yield is pretty insane. But sometimes it might look too insane that it might just be it might be real, right? So I mean, I want to say, obviously stuff like that is pretty interesting, and you always have to do your research. I'm pretty sure, Sniff, you do. You come in here with some great information. David Becker, I believe, is now going to follow through and get a little more information for us. David Becker, whatever information you get, you have to come back and share with us. But first, I want to say, how is this company able to pay that kind of dividend, right? This company, if we take a look at future, their revenue, they have high earnings, high cash flow from operations, which makes no sense, right? Based on their revenue, and fundamentals, right? They have more earnings than revenue. They even have more cash flow from operations than revenue, right? So how is that? That's the first thing I would say. How is that even possible? I'm not saying there's something sketchy happening. It's something that I don't understand how it's happening. So that's definitely interesting. If we take a look at dividend, right, dividend yields, they might have historical dividends per share, and dividend yield has increased dramatically, I mean, throughout the years. So we can see in since 2001, this company has paid more dividends every single year. So, right, I mean, dividend yield 4.9, they usually keep about that. Something must have happened, right? There's something that must have happened recently. It's probably going to be COVID. But no, you got me a little intrigued here, Mr. Sniff. Fizz, agree. I agree with Fizz. I wouldn't yield chase. That doesn't, I'm not saying don't buy this, right? I would say do more research on this to try to understand why it's happening. Sniff, very true, right? So it's probably something sketchy, but Bitcoin is sketchy and it has increased my wealth, right? So this is more of like a place where, hey, if I want to test it out, maybe throw some cash in it, but be careful with it. But it is pretty interesting, David Becker, like you mentioned, right? Dividend has gone up nearly every year on it. It's been very fluctual. If I want to take a quick look at the real question is, if I'm owning a business that pays 25% dividend yield, I would just buy off that business nonstop. I would be the biggest shareholder of that company. So that's pretty interesting for sure. Financial health, the company reports to have cash and no debt whatsoever. I'm just saying this seems a little too good to be true, right? But balance sheet looks okay, great, right? I mean, they make more cash flow from operations than they do revenue. They make more earnings than revenue. Their dividends have been increasing nonstop, almost like not in a straight line, but in a straight trend since starting. So Jose, can you please look at the dividend payout ratio? That's a big thing to look out for here. So let's see, how much dividends do they pay? I don't think they give the actual data. Earnings retained, 93. Is this like an REIT? Fizz, probably. I think like REITs, they need to pay about 90% of earnings to kind of save on their taxes. Or could this be a form of REIT in one way or another? So it's about 93% current payout to shareholders, paid as dividend and earnings. With this high. So I think, right, REITs pay 90%, Fizz, right? I believe is one reality income. I think this is REIT. So it seems to be, yeah, so it's more like an REIT, right? REIT pays, they have to pay, I believe, 90% of their dividends to kind of save, but could it, okay, maybe not what I meant on REIT, David Becker, in that aspect, but maybe it wants to enter that tax bracket or that tax movement that the REITs follow, because it's a mining company right now, a real estate firm. But I wonder if for the mining corps, there's something similar in it, David Becker, right? Because here we can see which is an actual REIT, has to pay, I believe, 90% of their earnings as dividend to make sure they kind of cover those expenses, to make sure they don't get hit with taxes or to some, I forget the actual rule. So even though this is not a typical REIT, it might be something related or something equal to miners. So pretty interesting, right? Definitely not my cup of butter, but interesting for sure. Sniff, thanks for bringing it up. So Kendo, EA is starting to rebound. I averaged down on Tuesday. Nice. EA is looking very attractive. I mean, the gaming market. I think the gaming market is undervalued, and I don't know if you guys know that, but I think it's very, very undervalued right now. $36 billion market cap on EA Games. I honestly think that's cheap, right? I mean, I'm not an angel fund investor that has $36 billion, but I feel if I had about $36 billion, I wouldn't mind buying EA Games for that market cap, right? I mean, they have strong IP with Battlefield, with FIFA, with all those big players. I can definitely see a potential growth in this company with that market cap, and as they are moving into more mobile games as well. And now, I mean, Take-Two Interactive, right? I mean, I'm not too fan of Take-Two. Take-Two has some great games, right? It's just not games I've really played, Fizz, right? I mean, Grand Theft Auto, I played it a little bit when I was a kid, always trying to get those 4 stars and just run around. I don't think I've ever played Grand Theft Auto for missions. I've just played it to just free play. Red Dead Redemption was also a great game, but EA Games definitely looks pretty interesting. I saw rumors of Microsoft buying out Take-Two Interactive. I don't know. That's actually, how is it? Blizzard, I think, has a market cap of about 60 billion. Yeah, I'm surprised I knew that. It's about $56.6 billion market cap on Activision. So EA Games, but I do want to say Activision is a monster. I've done a video comparing the two. Activision has more revenues. Activision, I believe, has better margins. Activision has more cash. So definitely, I understand the market cap difference between Activision and EA Games. I do believe EA Games can appreciate a little bit more, but Take-Two Interactive, right, about a 7 billion, I believe. Is it 16 billion. I think that Take-Two Interactive won't happen, but who knows? I think this is a little too much money. If Microsoft goes. I think they're probably better off buying multiple smaller brands instead of buying Take-Two Interactive. I think there's a lot of private. I believe there's a lot of private gaming studios that Microsoft could be better off buying than buying Take-Two Interactive. Except they probably would want that Red Dead Redemption market. But let's take a quick look at the market again, guys. So what do we have? Are we still green? What's happening? Yes, we're still green. Dow is up 1.35. NASDAQ up 0.93. S&P 500 up 1.1%. Recently news of Blizzard. Yes, Dennis, agree. And for sure, Fizz, if those news didn't happen, I think, and Activision was at these levels, I would definitely also be buying Activision. Very interesting what's happening with the stock right now. Kendo, Kendall, I mean, they bought, yeah, but these, I think, was like about a $7 billion market acquisition, I believe, maybe even smaller. It was in the low single digit. It was in the single digit $1 billion. But I think acquisition is going to continue. I wouldn't be surprised if Facebook starts acquiring gaming companies as well, which is going to be, or even Netflix. Some of these, I feel like some of these big players that we can't see, kind of going into content creators. What's it called? Like Facebook and Netflix, kind of really making content creation platforms. I could see them kind of doing gaming studio acquisitions in the future. So let's see. Hey, can you take a look at SLQT? All right, let's take a quick look. Just make sure you hit that thumbs up, right? If you haven't hit that thumbs up, Bill, man, should I buy more Nvidia? I fall in the bear trap. I don't know if there's a bear trap for Nvidia, right? I mean, the stock price did kind of take kind of downturn. I think in the short term, Nvidia has a lot of volatility moves. I think in the long term, Nvidia is super cheap. So if you're looking at 5 years in advance, for me, 5 years from now, Nvidia is super, super, super cheap. In the next 12 months, I think the market can see a huge correction on Nvidia. At the same time, so for me, Nvidia right now is more of dollar cost averaging. Bill Main, it's not time for me to open up a big position. That's just my opinion. I could be completely wrong. Facebook probably will get people to make experiences for Horizon, small mobile VR shops. Do you think they hit 1 trillion in 5 years? Fizz, do you think they hit 1 trillion in 5 years? Yes, in 5 years, yes. A 100 bagger, a 1 bagger in 5 years. Oh, for sure, I think so. I don't think it's gonna happen in a straight line, but I think so. I would say 90% that it would hit 1 trillion in the next 5 years, at least once. So, what was the stock you want to take a quick look at? You said SLQT. So, select quote right off the bat. Recent IPO, sitting at lower levels than its IPO price. We can see, I mean, plenty of volume right now. Recent company, right? So technicals, I'm not saying it's sitting at any. I want to say there is some volume here, right? Some volume, you can see it right there, right? So stock price is not overextended. It is very volatile, and we have to understand why this big drop here after earnings. Investors are not liking their earnings, it seems, right? After every earnings, this stock price, the past 2 earnings, has seen a huge climb down. But let's take a quick look at their fundamentals. SLQT, they operate technology-enabled direct-to-consumer distribution platform that sells a range of insurance policies to consumers from various insurance carriers in the United States. Right off the bat, I can say this is a boring market for me. Doesn't mean it's a bad market. Insurance companies are just not ones I follow. $2.3 billion market cap. With that type of market cap, if you are providing some kind of service to these insurance companies, I think it's more likely that you're going to be purchased off. So right now, the company is expected to grow 20.5% on average for the next 3 to 5 years. So it is profitable. It is a strong growth. It's also profitable, but insurance companies, I believe, they don't make money from cash flow from operations. They make money from some other cash flow. So it's very hard for me to determine this, but they do show that they're profitable in earnings. At the same time, GAAP earnings is not something I could care about. So analyzing an insurance company is a lot harder than analyzing another most the companies I usually do, because cash flow from operations I don't think matters for insurance companies. And if we take a look at their financial health usually seems to be a little bit more heavy side on debt, because I believe as the insurance company that those kinds of loans or those being insured are being kind of pronounced, are kind of being put as debt. So insurance companies, for me, I want to say SLQT, definitely not a market I follow. I don't think I can share any insightful information here, just because for me, this is a very hard market to try to analyze. So normally I stay off crazy financials like the insurance market. Adita, are you into any renewable energy stocks? At the moment, I don't think so. Not that I can come up with the top of my head, Adita, but I do kind of do a quarterly portfolio management, and feel free to check that video out. I share every single stock that I own. So maybe you can see. I from my big players, definitely not. not in the renewable energy stocks. Unless you want to count EV market. In the EV market, I do have Tesla and I have NIU, not NIO, NIU. But anyways, guys, I do have prior engagements at 11 o'clock. So thank you so much, guys, for tuning in. I'll see you guys tomorrow. Same time, maybe an hour after. But take care, guys. Have a good night. And see you next time. I just want to say thank you to everybody, Fizz, Maggie, whoever else, David, Sniff, thanks again for the donation. And thanks for kind of sharing that information with us. David Becker, Rajesh, everybody else that joined, right? Kendo, Bill, thank you guys so much. Adi, thank you guys so much. But see you guys tomorrow and hope everybody has a great day.